Oh, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, we have spoken a lot recently about the performance of gold compared to silver and the gold stocks, which gold does continue to outperform. And I think that argument has been true for some time. But let's step back a little bit and now compare the gold stocks to what's going on in the U.S. equity markets. I've pulled up a chart here of the GDX to S&P, and boy, oh boy, the last few weeks, I'm looking at a weekly chart here, and the last about 4 or 5 weeks have been all over the map, up and down. However, they're not really showing much trend. It looks much like a sideways move, which goes hand in hand with a lot of what I've been talking about, is that a good day for gold stocks usually coincides with a good day for U.S. equity markets. It's this attitude of a little bit of comfort, a little bit of calm, and a little bit of optimism, and money comes into the markets in a wide range of different stocks. What are your thoughts and what are you watching when it comes to comparing the performance of gold stocks to the underlying U.S. equity markets?
Well, Corey, this is very important. I mean, we've seen gold break out and make a new multi-year high against the S&P, which is very encouraging. We have not seen the same in the gold stocks, at least not yet. I mean, looking at GDX against the S&P, I'm looking at a daily candle chart, and I mean, it is above the long-term and even short-term moving averages. So, I mean, it has that going for it. But it definitely has been an erratic trade since towards the middle of February. Since then, it's been erratic, as you said, all over the place. But it's still above the long-term moving averages, which are sloping up. But that is a key thing that I'm watching right now, amongst a few other things, to see if we could get that ratio to make a higher high and go above. It looks like March 23rd, the peak was around there. I mean, if we could see that ratio close above that peak, that would be really encouraging. But I mean, when you're kind of in a crisis or a crash environment, all correlations go to one. And gold stocks, they crash with the market, and so they haven't quite diverged yet. And it remains to be seen. I think if we saw the S&P roll over again at some point and retest its low, that could be a point where we start to see precious metal stock diverge a little bit and show relative strength, because that's happened in past bear markets between the two. But yeah, I mean, where we are right now, it's one big macro trade. And interestingly, it really is the same with the particular gold and silver stocks. Like they're all are trading as one, given the pandemic and the fact that they're all shut down. I mean, the shutdown has already been, for the most part, it's already been discounted, at least this quarter, in the bad news and not mining and not working. But it remains to be seen, what's going to happen after the second quarter, and what's going to happen in the summer and the fall. And so the market is not quite starting to discount that yet, but we'll see what happens. Maybe over the weeks ahead, if the news on the pandemic gets better and better, maybe that'll be reflected in precious metals, anticipating some inflation when things come back online.
So do you think then, if this sense of calm sticks around and we do get some slightly better news about the coronavirus and some slightly more optimistic news about the potential of people starting to go back to work, that precious metals will outperform U.S. equity markets then?
I would think so, because they are trending up in relative terms, based on the long-term moving averages. That doesn't mean the outperformance is imminent, but it just means it's more likely than not that that's going to continue. And we might, the market, it's a discounting mechanism, as we know. It's forward looking, so it's already. I mean, as I said before, the market has already discounted all the shutdowns. It's looking ahead, and maybe the market will, if we see precious metals starting to move higher and sustaining it, based on starting from here, that could already be telling us that the market is sniffing out that the worst of the pandemic is over. A couple of key things that I'm really looking for, Corey. I mean, we already talked about the GDX to the S&P ratio. Another thing is look at the largest gold stocks because we are seeing inflows into gold. We're seeing inflows in the largest gold stocks. There's an index called the Dow Jones U.S. Gold Mining Index. And I'm watching that, and I think there's only like 5 large producers in that. But I mean, Newmont and Barrick are obviously extremely important. Keep your eyes on those stocks and watch and see if they can make a new high, if they can surpass their earlier highs from the first quarter. I mean, that would be, a key bullish tell for the sector if that happens.
All right, that chart, at least on stock charts, is money sign DJUSPM. And hey, it's not far off of those recent highs at 118.27, currently trading right around 113 and change. So it is closing in there, but isn't that just telling the story here of money flowing into the bigger miners and almost forgetting about the rest of the sector in terms of breakouts? Yes, we have seen some of the juniors bounce back and even some of the mid-tiers bounce back, but fact of the matter are they're still very much within their general trading ranges that they've been in for years. But the big guys, they are breaking out higher. This is, at least for the Dow Jones U.S. Gold Mining Index, this is the highest we've seen it ever since 2013 when it was heading down.
Yeah, I mean, it's very encouraging because they would not be, if there really was I guess if the outlook was, more negative, and if the market was more concerned that, we would have another whiff of deflation, you wouldn't see the largest gold stocks recovering this much and then trading this close to the highs seen before the crash. So, I mean, first you have gold. Gold's obviously doing well. We need to see gold make a weekly close above 1,700. The weekly closes are so important, Corey. I mean, how many times have we done an interview and I've said something here in the middle of the week and then it just, the weekly close is different. Whatever I said is meaningless. So focus on the weekly close for gold. Let's see if that can get above 1,700. Focus on the largest miners, the largest gold miners. See if they can make a new high, because Corey, if they can make a new high and take out those Q1 highs, I mean, that buying power is really significant. I mean, that's a clear difference than if it's just recovering most of the decline, but it doesn't have the strength to get back and test or even make a new high. But if they can make a new high and surpass the Q1 highs, I mean, that kind of buying power is significant. It would probably go hand in hand with gold making a weekly close above 1,700. And those things are significant, Corey, because eventually the money would trickle down to, the GDXJ, SIL, and a lot of the juniors that we follow. I mean, if you remember what happened during the last crash in the global financial crisis, the largest miners, they recovered really, really quickly. I mean, it took a little bit more time for the GDXJ stocks and then even smaller juniors to recover. But the biggest stocks, they recovered immediately after that panic low at the end of October 2008. So we could be seeing something, a little similar. Remember a couple of weeks ago, Corey, I mentioned that the rise that we saw in GDX and GDXJ off the lows in percentage terms, it was like nearly equivalent to what happened off the 2008 low. So this, again, if gold can, make a higher high on the weekly close, and if we see the same thing with the largest miners, that those things could be telling us that money could start trickling down to the rest of the sector. And then in that scenario, we probably wouldn't need to worry about, a huge retest of the lows that we saw.
So does that then, if we do get that breakout in the large miners and in gold, is that the all clear to start putting more money at play in these juniors, or is it still the play to focus on some of the bigger stocks and ride those up until even some of the bigger stocks start buying out some?
Well, it's a great question, Corey. I mean, it depends on, which juniors are you talking about? Are you talking about the higher quality ones that are cashed up that are a little bit larger, or are you talking about smaller juniors that are more early stage, a little bit above the ground floor? I think, those types of juniors will be very interesting to keep an eye on. But if you level up a little bit and you look at the ones that are cashed up, that they already have something, they have some defined value, and maybe they have a project that looks really good, and you know, uh, and they've seen some inflows as the sector has recovered. I if we get the breakout that you're talking about, I think it would probably be good for everything, to be honest. I mean, those high quality juniors that are cashed up, that they have something that the market thinks is pretty good, the money will probably flow into those, and maybe even a little bit, and in some cases, um, down to those lower ones at the bottom of the food chain. But I'll mention the what happened coming off the global financial crisis low at the end of 2008. That is when we had the bottom, but that wasn't, that took about 5 weeks to be confirmed. So GDX bottomed at the end of October. GDXJ bottomed. This data is from the MVIS website. GDXJ bottomed towards the end of November, and then GDXJ started to outperform in early December. But if you look at, I think the venture index, I mean, I think that didn't really start to take off until a couple months after that, like February or March or '09. So it doesn't mean things are going to play out exactly, but there is. I mean, there is a pathway that you can follow coming off these crashes where, gold tends to do best first, then the largest gold stocks, then the rest of GDX and maybe GDXJ, then the silver stocks, and then the smallest juniors will follow that. So, to make a long answer short, as far as an all clear, I mean, I hate to use those words because we never can predict the future. But if the largest gold miners, if they make a new high and gold makes a weekly close above 1,700, I think that could lead to money starting to flow into the rest of the sector.
Okay. Yeah, and that's really still what we're waiting for. More money to flow into this sector. But again, a little bit of stability is also, I think, a good thing because, well, we all saw gold stocks there are not immune from a sell-off when there is this race to cash. Long term, Jordan, and like everyone, I think, agrees that gold should do pretty well in this environment where this much money has been printed and will continue to be created. But right now, it's all about, I think, investors' confidence moving forward. Jordan, appreciate your time. Always interesting to hear your thoughts. And I think one thing to keep a close eye on right now is the reaction of stocks compared to U.S. markets and see if we start to see some sort of outperformance in the actual gold stocks outside of U.S. markets. Jordan, thanks for your time. Have a great rest of your week.